Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity Mates.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Great to be back with you for another Monday episode.
Yes.
I'm very excited to talk a variety of things.
Yes, we had a big week last week of renewable conversation. Mary Manning did a deep dive on the solar industry. So we're back today with conversations around SPAC City. We're going to have a look at what's going on in venture capital. And then, Ren, you're going to pitch the Berkshire Hathaway of software.
Yeah,
Wow.
I know.
That's big.
It's a big call.
It is a big call, but very much looking forward to that. So big episode of EM Chat today. Before we get stuck in, though, bit of housekeeping. Journalist.
Yeah, we are on the hunt for another team member to join the Equity Mates family here.
Yep.
We've got a show that we want to create in-house, and to do that, we're looking for one of Australia's best journalists or financial writers. So if that's you, or if that's someone you know, or if that's someone you could be, hit us up, careers@equitymates.com. Passion
for
is
markets.
more important than experience.
And the ability
Experience
to
also helps. But yeah, hit us up. It's we're pretty excited about this show. It's been on our pipeline for a while, and we've never quite had the ability to execute on it. But we think now's the right time. So come join us if you're intrigued.
It is a full-time role. We're looking for people who are passionate about markets and can write really, really well.
Yeah,
That's it.
that's it.
Careers@equitymates.com. Any other housekeeping, Ren?
Yeah, I want to give Dylan from Broken Hill a shout out. My sister just moved to Broken Hill and moved in with someone who was an Equity Mates fan. So I said I'd give him a shout out. So Dylan, thanks for listening, and thanks for making my sister feel welcome in Broken Hill.
Nice. Well, yeah, and shout out to the random guy we bumped into at Rushcutters Park 2 weeks ago as well.
Bryce has a diary where he keeps every interaction with someone who recognises him. So we can't quite afford the dollar offer that Hamish and Andy do.
No,
We don't have that kind of cash on
We'll
the balance
give it
sheet.
a handshake.
But Bryce will record you in his journal.
And shout out as well to all of the other shows in the Equity Mates Media Network. If you have just joined this podcast for the very first time, welcome. This is our flagship show, but we do have plenty of other shows in the network that really help you depending on which stage of the journey you are at. So we've got Get Started Investing, another show hosted by Alec and I, which covers all the fundamentals of investing, really goes back to basics. So head over there if you're still feeling a little overwhelmed. You're in Good Company is hosted by Maddie and Sophie down in Melbourne, and they are also tracking their investing journey, trying to improve the conversation amongst women and encourage their friends and everyone else in the community to get started investing. We also have Comedian v Economist, the two boys chatting all things macro, and Talk Money to Me, Candice and Felicity, two financial advisors. And Talk Money to Me with Candice and Felicity, two financial advisors at Shaw & Partners, helping you understand more about personal finance. And of course, Meet, Pay, Love, Carmel and Zoe, breaking down the conversations you should be having with money and your partner. So a lot going on in the Equity Mates network and a new show on the horizon.
Yeah, that's 6 shows, but we're not done yet. 7th show is Crypto Curious, in partnership with the team over at Bamboo, the micro investing app to help you get started in Bitcoin and Ethereum. They're going to be breaking down the world of cryptocurrencies, NFTs, Bitcoin, and really focused on helping those that may be curious about cryptocurrency really understand it and understand, what's going on in the news, what these digital assets are, and what they might be in the future. So first 3 episodes launch on the 8th of November, so next week, but the feed is up. Search it wherever you get your podcasts, subscribe, listen to the trailer, give it a review, get ready. Number 7 launches in a week.
Yeah. It's going to be big. So head to equitymates.com to find out more information on all of those shows. So SPAC City. It's a couple of big SPAC deals in the last couple of weeks, Ren. One with WeWork and one with Trump. So we're going to go through both of them in a little bit of detail because it's pretty fascinating what's happening over in SPAC land.
Yeah.
It's a SPAC city.
So for those who are unfamiliar, SPACs, special purpose acquisition companies, they are basically a blank check. They go raise a bunch of money from investors with basically then a time period to then go and acquire a company. So investors give them money and say, go buy something good with it, rather than the traditional IPO where investors know what they're putting their money in. So WeWork merged with BowX Acquisition Corp, and then Trump's new media business merged with Digital World Acquisition Corp. Let's go through each of them because they're both pretty interesting. WeWork, we're actually sitting in a WeWork recording this, so we better be careful about what we say.
Yes.
WeWork, for those who are unfamiliar, shared office business, 750 locations worldwide across 150 cities in 38 countries. We're recording in Sydney, and I think at last count they have like 14 WeWorks in Sydney.
Don't know about that many, but yeah, it's double digits.
It's in the teens, yeah. 2 years ago, they tried to go public at a $47 billion valuation. What happened?
Well, it failed in a big way. As they were doing their roadshow, it went from potentially one of the biggest IPOs in history to an absolute flop. Didn't even get off the ground. Adam Newman, the CEO, was kicked out, and SoftBank sort of took charge and started stripping costs out, and it's been bubbling away ever since. Yeah,
so went for a $47 billion IPO. They eventually realized there were a whole bunch of problems with the business. The CEO was cleared out. The SEC investigated. The New York Attorney General investigated. WeWork went through several rounds of layoffs, eventually slashed 2/3 of their headcount, exited or renegotiated hundreds of leases on buildings. Then COVID-19 hit, which obviously decimated the office business. But they've got through it. This merger is a $9 billion merger. So from $47 billion to $9 billion, not great.
Not great.
But, a few years ago, they were probably at zero.
They'd be taking anything at this point.
Yeah. Now, they're still losing money. In the first half of 2021, WeWork recorded a net loss of nearly $3 billion. Crazy. The office business is a tough one, I guess, for obvious reasons with COVID and stuff like that. But, they got it. They got the IPO done. Good on them. One company that may be a little bit disappointed, SoftBank.
Yeah.
Invested $18.5 billion in WeWork. And now the whole company's only worth $9 billion.
So there's a bit of a long way to run for WeWork, for SoftBank to at least make their money back, that's for sure. We're starting to see it turn here in Sydney anyway, in the office that we're in. Certainly a few more people coming back. So you never know. The fortunes could be turning for WeWork. But yeah, it's certainly not the glory days that it was. I read that Newman, though, he still holds stock, and the stock that he has are now worth a couple of billion or $1 billion at least. So he'll be cheering.
They say invest in what you know. Are you investing?
No.
Yeah, neither.
No, sorry, WeWork. I'll keep my eye on it, and but for me, I personally just think there's too many spaces here in Sydney. So
yeah, for me, I don't see the benefit of scale here. Like some businesses, you can see the benefit of scale, but in every local market, WeWork is competing with local competitors, and here in Sydney, there's Spaces, which is like a big Sydney-based shared office competitor. Then you go down to Melbourne and there's another one, the Commons, and they've got a number of spaces. And like in every city WeWork operate, they've got these local competitors that are basically competing to offer a commodity product. Walls, chair, and a desk. And you can have all the free beers on taps and coffees that you like, but at the end of the day...
you can't because they shut the taps.
Yeah, true. But at the end of the day, like the decision makers at the company are really just going to be driven by price. Like the people that enjoy the perks and the people that are making the decisions about where they go are generally not the same people. And so for me, it's just like... and and unless there's one use case where that scale makes a difference, which is if they're trying to sell office space around the world to multinationals, like they go to Microsoft and they're like, don't worry about getting office space in every city. Just do a global contract with us and we'll house your people in every city. That's the one use case where I can see scale is a benefit.
Which they definitely do.
They do, yeah. But for most businesses who aren't multinational, I don't see why having 750 buildings gives you like the unit economics of each building don't get a lot better. There's sure some things you might get some economies of scale, like procuring the beers and procuring the coffee, but still it's things that are whether you buy or maybe they get a better deal on chairs than like a local competitor. But yeah, you know where I'm going with this. I don't see the scale benefit. So for me, I'll use the space, but I won't invest in it.
No. So Ren, let's move on. Trump loves being in the news, and Trump announced a merger with Digital World Acquisition Corp. The ticker is DWAC over on the NASDAQ, and it has been booming, up as much as 1,657% since the deal was announced. So what's going on?
Yeah. Trump loves being in the news so much that he's making a news business.
Yes.
So Trump has said for a while he's going to create his own social media.
Yeah.
And I guess this is his second attempt, because his first was that blog that he published a little while ago. Do you remember that?
Yeah, I did. But wasn't there also rumors before the reason that he ran for politics was to try and pump up his TV station?
Yeah, he wanted to create like a far right news network or like a conservative. Yeah, that was the story in 2016.
Yeah.
But now he's doing it. So it's called Trump Media and Technology Group. And on the basis of a 22-slide deck, Trump has created about $3 billion worth of value, which is pretty crazy when you think about it. So
just to recap that, it doesn't exist.
No.
Yeah.
No, it doesn't exist.
It's a merger with an idea.
Yeah. So the SPACs, their share prices are $10. That's like where they start. And they trade around that $10 mark until they announce an acquisition.
Yeah.
So the SPAC that acquired this idea from Trump closed last Wednesday, or when this is released, the Wednesday before, at $9.96. So around that $10 mark. The deal was announced. By Friday, the share price peaked at $175. So Trump's name, I guess, and the idea rocketed that SPAC's share price up. It's come off a fair bit, but it's still up, I think like 5 times from where it was before the deal was announced. Trump has become this has become the number one meme stock on Wall Street Bets.
No surprises.
More mentions than GameStop at the moment, or AMC, or any of those other companies. So, it's become a real meme stock. But anyway, let's talk about what the business is, because it's pretty funny. And if you flick through the 22-slide deck, it's pretty funny as well, because about a third of it just talks about how many Twitter followers Trump has.
Classic. That's all he cares about.
Had. Yeah,
true.
So, Trump Media and Technology Group, slide 2 of the deck talks about their vision, and I just want to read it out to you, because he hasn't let bygones be bygones. And I quote, TMTG aspires to create a media powerhouse to rival the liberal media consortium and fight back against the big tech companies of Silicon Valley who have used their unilateral power to silence opposing voices in America.
Unbelievable. How's he going to do it, though?
Yeah, so three arms for the business. Truth Social, which in the deck says it's going to be taking on Twitter and Facebook. And then TMTG Plus, which will be taking on Disney and Netflix. And then TMTG News, which he says will be taking on CNN and iHeartRadio. Then he mentions longer term, they will build TMTG Tech Stack, which will take on Amazon Web Services, Microsoft Azure, Google Cloud, and Stripe.
Yeah, good luck.
So I think combined, I haven't done the maths, but combined those 10 companies they've listed that they're taking on are probably worth about $3 trillion. Yeah,
well, they're probably they're literally the top 10 biggest some of the top 10 biggest tech companies in the world. Nice, Trump. Love the ambition. Doubt it's going to get off the ground, but well, it could get off the ground. Whether or not it's as successful as they think it is going to be, that's the next question.
There's so many ironies in this, and Thomas and Adam over at Comedian v Economist did a good segment on this. So if you want to hear more about Trump's media business, go check that out. But two things stand out for me. Firstly, Trump in his deck said that they were building a non-cancelable global community. Obviously, because Trump feels like he's been cancelled. Then a whole bunch of people signed up to Truth Social under the name Donald Trump, and they were removed. They were cancelled. But the funnier one for me is that in the terms and conditions of Truth Social, there's something about using excess capital letters is like a violation of the terms and conditions.
Doesn't Trump only use capital letters?
Yeah. And so Thomas and Adam put up something on Instagram comparing the pair, but it's a mess from the start.
Mess from the start, but it's worth $3 billion.
So here's a question that I've asked you before, but I want to ask you on the podcast. Two SPAC mergers, WeWork, $9 billion market cap, losing $3 billion a year. Oh, sorry, $3 billion a half. So annualize that, $6 billion a year. Or Trump's $3 billion idea that isn't losing any money. Which would you rather invest in?
Yet. Oh, well, I mean, you probably have more chance at the moment of making something from the Trump, just given the meme nature of it.
There we go. Bryce Lesky once again supporting Donald Trump. Everyone heard it.
No. But yeah, look, two fascinating SPACs coming out of SPAC City. I'm sure the trend will continue, and we'll see more and more interesting stuff come out of SPAC land. But let's move on to VC, Ren, because there's a lot going on in that space as well. Yeah,
well, let's do this quickly, but I think this is worth chatting about. I think it's pretty interesting. Sequoia have done something that is worth paying attention to. So, but let's start at the beginning with VC. Everything's up this year. We know that, from digital art to real houses and everything in between. The median US venture capital fund rose 88.1% in the 12 months to June 2021. So almost doubled in a year.
In the 12 months to June
2021, yeah.
2021. Nice.
So 88% in a year, you'd take that. And that's just the median venture capital fund. So I think venture is having a really good moment. And, for obvious reasons, we can think about the amount of amazing companies that are listing, the last few years. But Sequoia, who are one of the oldest venture capital businesses, have announced this week that they're changing the model for venture capital. And I think this is interesting and worth paying attention to. So to start with what the traditional venture capital model was or is for every fund is different. So let's say like Equity Mates is a venture capital fund in the same way that like Sequoia or Andreessen Horowitz or any of those really famous names over in the States are. They each raise a different fund every time they want to invest. So it would be like Equity Mates Fund 1 would raise money from investors, go and invest that in companies, spend that money, and then it's done. And then Equity Mates Fund 2 would start, and we would raise money from investors, go and invest that, and they're completely separate. And so, Equity Mates Fund 1 might have invested in Atlassian and Canva and, Afterpay and Zip. And then Equity Mates Fund 2 might not have invested in any great companies. And that's just too bad for the investors in Equity Mates Fund 2. Like every fund is its own unique thing, even if it's invested by the same company or the same VC fund or the same team. Makes sense so far?
Yeah.
Sequoia have said that they're going to change this and they're just moving to a single fund structure. Basically think of them as becoming a hedge fund or a private equity fund. They're going to start charging a management fee, potentially performance fees, and they are... Yeah, they're changing the way that VC has been done. So that's the change. In terms of why they're doing it, they've said it gives them flexibility. For investors, it means that you don't have to commit your money to a specific fund. For the company, for Sequoia, it will allow them to hold investments longer than any other VC fund. But I actually think there's another reason that I think is quite relevant. Well, I think there's two other reasons. But I think the one that's particularly relevant for us as investors is the competition that's going on in the space between private equity, hedge funds, and venture capital is heating up. And this is Sequoia. This is venture capital fighting back for the first time. So last few years, hedge funds and private equity have been pushing into the venture capital space more and more. And there's been some famous names there. Tiger Global, BlackRock. They've been taking VC's deals, basically. And this is the first time that VC have said, we're going to copy your structure. We're going to change what we can invest in. And I reckon what's going to happen is Sequoia are now going to start trying to take the fight and, do more like private equity deals or hedge funds. They're also looking more at crypto and stuff like that. So it's just an interesting dynamic between the big, deep pocket end of town.
Yeah. So one of the partners, I'm going to butcher his name here, but Roluf Botha.
The
partner of Sequoia, ex-CFO of PayPal.
Yeah, this is the head of Sequoia, basically.
Yeah. So if you want more info on this, head to his Twitter channel because he talks about this in a bit of detail. But to your point, Ren, he really makes note of the fact that it's removing that sort of traditional 10-year cycle of a VC, removing those barriers and allowing them to get involved in companies for a lot longer and take a lot more opportunity to compound over a longer period of time. So he's looking forward to or really highlighting that ability to hold for longer than your traditional VC fund structure. So yeah, a lot of money in this space. It's interesting to see.
Yeah, and I guess why this matters for us as investors is because more and more companies are staying private and more we as public market investors miss out on these opportunities. So if you think about back in the 90s, Amazon, listed in 1997, it was 3 years old. It was worth $700 million. It's now worth $1.7 trillion. So basically all of that value creation has gone to public investors. Like we could have participated in all of that value creation. Then you think about, the sort of the next generation of really dominant companies in the, 2010s, Airbnb, Uber, those companies, they waited about a decade from when they were founded to when they IPO'd, and most of their value accrued to private investors, but not all. And over the long term, it will hopefully even out, especially if we're shareholders in these companies. But then you think about like the really exciting cutting edge companies of today, and the two that really come to mind are Stripe and SpaceX. And both of those are worth over $100 billion. Neither of them look like they're going to IPO anytime soon. And so it's just this, because there's so much money in private markets, and because there's so much additional pressure that comes with being a public CEO, these companies just can say, we're just going to stay private for longer now.
Yeah. So the Roloff mentioned Square, and they partnered with Square in 2011. It went public in 2015 at 2.9 billion, and it's now 120 B.
Yeah. Sequoia, so traditionally VCs hand shares back to their investors when a company goes public. Square, I don't think they did. I think
Still partnered.
He still sits on their board.
Yeah.
But the stat is Sequoia have 45 billion in public stock holding, and 43 billion of that is investment gain.
Wow.
Yeah. So just in the public stock holdings, they've 20 bagged it, and that's traditionally VCs would just give that money back, but they've been holding on to it more and more, and now this structural change will allow them to do that more. So it's an interesting one. Sequoia aren't going to list. They've explicitly said that. I mean, what would have been cool for us as investors if if the management company Sequoia listed, we could have invested in that. And then as they go and do their thing, we benefit from the management fee and stuff like that. But yeah, I think this is a dynamic that's going to be worth watching because Tiger Global especially have been eating VCs deals based. Yeah.
Yeah, they've raised a heap of cash.
Yeah, even Stake, like the broker in Australia, raised a hell of a lot of money from Tiger.
Yeah.
And that was Tiger, again, just like getting in before traditional VCs could, giving more money on better terms.
Yeah, interesting. All right, nice. Well, it'll be interesting to see if some of the other big dogs follow suit. Okay, so it is watch list time. Just a reminder that if you want to follow along with any of the stocks that we talk about on the watch list or any of the stocks that our experts talk about or any of our other show hosts talk about, head to our website, brand new website, and there's a beautiful page with all of the stocks in watch list form. So go and check that out and you can listen to the episodes that they're attached to as well. But Ren, you did promise us at the start a stock pitch. So it's Constellation Software.
It is. Sometimes called the Berkshire Hathaway of software. And I wanna state from the outset that this obviously is not buy, hold, or sell advice. Don't take financial advice from a podcast, but also that it trades at a PE of 100.
Okay.
And so it's expensive. And so even if it was a stock pitch, it would be a watch this space and make sure you're comfortable with valuation or wait until valuation comes in a little bit.
Okay.
But I want to talk about this company because I reckon it's one of the coolest companies out. It flies under a lot of people's radar. I asked you before we started recording if you'd heard of it and you hadn't. And so I think a lot of people in the Equity Mates community probably haven't, and it's worth knowing about. But I also want to bring it up because this is the new campaign that I'm starting.
Yeah.
It's called Give Me Canada.
Okay.
And essentially, none of the brokers that I use, and I'm going to name check them all, CommSec, IG, Stake, Superhero, none of them give me access to Canada. All of them give me access to America. It's like, it's just over the border. It's the same landmass, just added on.
Yeah. I'm surprised IG doesn't.
Same. But this company is also listed over the counter in the States, and none of them have it listed, which is fair. But there's a lot of great opportunity in Canada, and so I'd love to see someone pick up the mantle and get us Canada. I'm sure none of them appreciate us calling them out, but hey, if we've got a platform, we've got to use it.
Sure.
So this is just one of the many companies in Canada that I think are pretty cool, worth paying attention to. So let me give you the founding story. Let me take you back to the 90s. Mark Leonard was a venture capitalist. He was investing in software businesses, and one of the key reasons that software businesses weren't getting investments was because of a small total addressable market. We think of software businesses, we think of Atlassian, we think of Microsoft, we think of these companies that can basically address key markets across the world, software developers or like businesses or, like something where there's hundreds of millions or billions of potential users. But there's all of these software businesses that are niche, that are small, that don't have big total addressable markets. And so when venture capitalists look at them and do the maths and ask, can we get a 10x or 100x return? The answer is no. So then they're not investable from traditional venture capital. But they're great businesses. They create a whole bunch of cash. And so Mark Leonard, I think he started by raising 25 million Canadian dollars and said, let's roll them up.
Roll it up.
So the focus was vertical market software is the term of art here, but it basically is companies that create software for a particular industry or market as opposed to creating software usable for a wide variety of markets. So these are these really niche small operators. But the important thing here is that they're mission critical businesses. So they're things that industries rely on. They're software platforms that industries rely on. And when businesses rely on you, you've got stable earnings that you can grow over time. But you may never get to that sort of multi-billion-dollar venture capital exit size. So Constellation has acquired over 500 businesses, and I think that number's out of date. I think it's a lot higher. The majority of the acquisitions are relatively small, less than sort of 5 million, although they've scaled up. I think the highest was about 360 million. There was another for about 250 million, but a lot of them are very small. So I've got a few examples of the businesses to give you an idea of what we're talking about when we say these sort of mission critical vertical market software businesses. So I'll rip through a few to give you a taste.
Sure.
Envisionware is a provider of technology solutions for public libraries.
Nice.
They have a rich history of providing self-service and efficiency solutions that enhance library services and empower patrons. Library software.
Small TAM.
Small TAM. Sphere WMS is a leading cloud-based warehouse management system for third-party logistics, distributors, fulfillment, e-commerce, and retail warehouses.
Okay.
I mean, warehouses, not small business,
Yeah, seems
but still
larger than libraries.
But still, not a global. Oh, you know what?
global.
It's pretty global.
Yeah.
All right. What about this one? Incom SAS is a French provider of business software solutions for water and energy distributors.
Okay. Plenty of them around.
Plenty of them around, but again, niche.
Niche.
Like, don't get me wrong; these can still be
Massive.
big
Yeah,
businesses. They're just niche. What about this one? Asset Intertech is a leading provider of solutions to validate, characterize, test, and debug chips and circuit boards.
Niche.
Niche.
Sick.
Next one. This is a bit more consumer facing. What Salon, an Irish app that connects consumers in real time with beauty salons and hairdressers.
That's interesting.
Yeah.
Isn't that just a phone call?
Oh, come on, bro. No. Well, I mean,
I
are you a phone call operator when it comes to like booking appointments still?
yeah, I called a restaurant 2 days ago.
Oh, really? Yeah. You know they've got like websites for that now.
It said call,
Okay.
Yeah.
Well, it must be the
and I did. And
the
it,
fancy restaurants that you're going to.
It was a pretty fancy one, yeah. And,
Must be nice.
and they're not open because there's not enough staff.
Really?
Yeah, because of COVID. No one's coming back to work. There's a labor shortage.
There you
in
go.
hospitality. Anyway, they need an app to connect me with them.
All right, so some other software platforms. Common Sense, a leading provider of room service automation. CGG, a geo software platform for geologists to, and I quote, unleash the full power of cloud computing. So there's a bunch more like this. Infinity Enterprise Lending provides category-leading loan management to alternative credit lenders. A bunch of other ones. But I think you get the concept, which is these sort of niche software businesses that I think Constellation's minimum sort of threshold is $1 million in earnings annually, and the ability to grow that, good management team, all that stuff. And then they take a pretty decentralized approach to it. So they acquire these businesses and then they say, run your business. And I think sometimes they will buy businesses that compete with each other. And it's that Berkshire Hathaway fully decentralized idea of, we'll give you help if you need it, but otherwise
You do you.
you do you. So that's the business model. That's why they're called the Berkshire Hathaway of software, because it's a software roll-up, and roll-ups have a bit of a fraught history when it comes to the share market. There have been some roll-ups that have been incredibly successful, and others that have not been successful at all, and they've sort of grown by acquisition, and then the market's realized it's this Frankenstein of businesses that don't really work together. In this case, it seems to have worked. Here's some of the numbers. So the company listed in 2006. Since then, the share price is up 11,381%.
Wow.
on an annualized basis, compound annual growth rate of 36%.
Wow.
Yeah, since 2006. Wow. So for 15 years. $38 billion US dollar market cap today.
Pretty
Not
big.
bad.
Yeah.
Pretty big. Some of the numbers. So 3.9 billion. These are all US dollars. 3.9 billion in revenue, and the 5-year compound growth rate of 17%, and then 436 million in profit, and the 5-year compound growth rate of 20%.
I can understand why you want to get access to it.
Yeah, yeah.
Where to from here, though? It feels like is the strategy just to keep on bolting things on?
Yeah. I
Keep
think
buying.
And I think so. I was listening to someone, and I don't know if this is true, but apparently Mark Leonard used to write quarterly letters, and then his board told him to stop because his competitors were just stealing all of his IP.
No way.
Yeah.
Wow.
But apparently he used to just say there's no upper limit here. Like, there will constantly be more software businesses. I think there's something like 100,000 software businesses in the world, or, like the number is just outrageous.
They bought 100 businesses in 2019.
Alone.
Yeah.
Yeah.
Just bang.
Yeah. So I think the idea is that they will keep growing. The market definitely expects them to keep growing with pricing it at 100 PE.
Well, yeah, I only imagine that there's going to be more and more of these niche companies evolve as tech improves, and like it's certainly not a dying industry.
Yeah, and I think the key thing is like a lot of the things that have enabled these businesses are only continuing. You know, back in the day, a lot of these niche businesses wouldn't have been able to get up because they would have had to run their own servers and, like build their own, back end databases, like all that stuff, all that like really technical stuff that made building technology companies difficult. But now that's all been, I guess, automated or, put on the cloud. And so, people who want to build a library software platform business can just focus on solving the needs of the library operators and not worrying about like building a proper tech stack and all of that stuff. And I think that has just enabled so many more niche businesses, and it's brought costs down to enable so many more of these niche businesses to be profitable.
Yeah.
So I think it's only going to head in one direction in terms of more niche businesses. The key question is, can Constellation be the one to acquire the good ones? Because more and more companies have realized the play here.
Yeah.
And so we've seen a number of competitors emerge that do exactly the same thing, roll up niche software businesses. We've also seen traditional private equity and hedge funds move into this space a little bit, but also we've seen a new breed of private equity called micro PE that, again, try and do something similar. And I guess they use that private equity playbook of, leveraged buyouts and, turnarounds and all of that stuff for private companies, but they do it at a much smaller level and they do it with much smaller companies. And so there's more and more competition for deals, and what happens when there's competition for deals, the price of the deal goes up. And then the question is the deal still a good deal if you're paying double what you expected to or whatever? But yeah, for me, I just think this is a cool company. I think this is like an example of someone who for 15 years since listing has just been doing it, and has created so much value, and so many people don't know about it.
Unbelievable. Well, I can understand why you want to get access to it, Ren. So shout out to any of the brokers here in Australia who don't have Canada on the platform. Get it on purely just because of this company.
Well, yeah, not purely because of this company.
Why not?
Maybe we'll just keep talking about great Canadian companies until...
See what happens.
Yeah.
Well, it's pretty amazing company. Massive expectations from the market on 100 PE, but maybe it will one day get there. Come into that value. Who knows? But nice. So we'll put that up online, and we'll link this episode to it. And a reminder that if you want to check check out any of the other stock pitches that we've done here or that our community members have done or that any of our experts have done. Head to our website, equitymates.com, and you can listen to them and have a look at the past performance of them as well, whether or not we've actually done all right. A reminder, this is not a buy, hold, or sell
I think that's
recommendation.
critical. Yeah.
Well, Ren, that does bring us to the end of our episode today. Plenty more content coming this week. On Thursday, we are sitting down with the first of our guests to talk through the Sown Hearts and Minds conference that's coming up. Don't want to reveal who it is because we've got some exciting guests, but stay tuned for that on Thursday. A bonus episode coming out later in the week, and then a big week of ASX Investor Day next week. So plenty happening at Equity Mates Media. We'll pick it up on Thursday, Ren.
Nice.
Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.